but create a goal that is attainable enough that you can feel good about attaining it. Because I promise you, the batty energy that you're going to bring into month 2, having hit your goal of making 25%, like let's say your goal, you're 3,000, so you're looking to make 750, 800 that month, the energy you bring into month 2 is dynamically different. Having succeeded the previous month, the discipline, the energy, the mindset is different than had you failed the goals you set for yourself and then tried to achieve them in month 2. You're killing your psychology in that process. You're killing it. It's not good. It's not good at all. So, but very preachy today. Sorry. Very, very. But I like these topics. Like, this is my passion. This is how, if God so wills, this is how I would impact people, are these concepts. Because money in business is not hard. People make it harder than it needs to be. And then their mindsets and their psychology and their behaviors that go around it beat them up 100% of the time. And then they're constantly floating above break even or just getting by for the remainder of their life. And I think that's no way to live. I don't think we were called for mediocrity. I think we were called for greatness. And I believe that with every whole heart of my soul, for every single person on this call, you are called for greatness. So your job is to show up and figure out how to get there. Any questions, thoughts on any of that whatsoever? And then I did promise Robert, so I want to go through 2 different concepts, and then hopefully we can chop them out of this video and then put them in the pinned messages and stuff. In terms of chart markups. Remember, next week is a holiday. So Tuesday, I intend on doing a Zoom from my laptop. Thursday, obviously, is Thanksgiving. So please eat and be merry. And that is that. So any questions, comments, or things relating to any of that stuff before we go over some chart markups? Well, hopefully impactful. Worth it? Like a little bit? I hope.
Oh, definitely great for me. On the way, man. Well, definitely good for me. Thank you.
Cam, honestly, listen to it again. I promise you, it is the beginning, middle, and end of everything you're trying to do. I promise it is. Okay, so let me get through the beginning, middle, and end. It's very simple. And then ask your questions. So I'm going to show you the way I find my areas of interest, as promised. And then I'm going to show you what I've been doing here lately that I think really applies to. So I've got 2 different methods. So I'm going to minimize this other one. Now I have access to this, and that's what I wanted. I'm going to go to YM. What's your favorite? So of these instruments, what's your favorite? We're going to go to your favorite.
NASDAQ.
NAS, okay?
This is what I've been doing.
Okay. I'm going to NQ. This is the full-size contract, but again, the instrument doesn't matter. So let's make this, we can make this a nice video. So again, your job is to stay muted and put your questions in the chat, and I promise I'll answer them. This way we can make this into a nice little video clip, and then I'll answer your questions as well. So first things first, the first thing I'm going to say before I even do this is, number 1, you can do it on any instrument. So if you're trying to get a better price on your retirement funds, on your crypto investments, on your Roth IRAs, it doesn't matter. Forex, futures, the instrument is insignificant. Okay. How I've marked up my charts to find what I call areas of interest is very, very simple. The reason why I like it so much is because it's duplicatable, right? It's really easy to have all these thoughts and theories and concepts and like made up words that you kind of made famous on accident, and Batman and, teacups and all the formations. But really, if you think about it, somebody just saw the teacup. It's kind of like you see something in the clouds and then they labeled it and then it caught on, right? Same thing with some of those words we throw around, like ICT concepts. One of those are words we throw around. They literally were made up. And I don't say that to do any disharm to some of the concepts. I think they're amazing. I think order blocks, fair value gaps, supply demand, I think they're all amazing. But the reason why I think what we're about to go over right now is the most significant is because at the end of the day, the word Jenny uses, Blow Joe, Stevenson Lindor, Warren Buffett, it doesn't matter. You have to be able to do this, and your eyes must be able to see it, okay? So with that in mind, kind of going over all of the things, okay? Again, the instrument doesn't matter. First thing I do is I'm always going to the 1 hour time frame because this is what it matches my trading style, which is pretty close to intraday, very minimal swings. The idea is I'm trying to find the zones that are significant for today and or the next few days, right? The next 3 to 5 days, I want to know where these zones are going to be at, okay? Especially if there's high news, we're going to pop to those zones quick. If there's no news, we're not going to get there. Cool. So I'm on the 1 hour. I'm always 100% of the time going to refresh my chart. I'm on TradingView because marking up the zones that I see here and or the zones that I see here, same instrument, that's not going to yield me the same results if I did this, for example, every Sunday or Monday. I'm going to get very, very different results, and I don't want that. So 1 hour time frame, step 1. Refresh my chart, step 2. First thing I'm going to do, and there's a lot of variations, you're going to find, hey, I like this one, I hate this one, totally fine. Choose the ones that best align with you and get good at doing it consistently. That's your only job here. But I'm going to go ahead and find the high and the low. So the most extreme high is here. Make sure that's white, okay? And the most extreme low, most extreme high is a little bit covered by that buy button. So I'm going to mark it here. Actually, let me try that again because I think I just foobarred it. It's going to be right here. How do I turn that off? I forget. But you guys get the idea. So that's the most extreme high and the most extreme low. Pretty simple. We are refreshed, and I can tell because the circle's not there. So this is the exact view, right? The exact view. We're completely refreshed. Great. If price is currently moving down, which it is, we've got bearish candles. And sometimes if you can't tell because it's kind of janky, go to the line chart. You'll be able to see price is moving up or moving down. Well, you know it's moving down. So the first thing I'm always going to do is mark up my zones or levels to the downside. What I do is I find a blue box. I get my blue box. You can use a line if you'd like. I like the boxes because it just gives us a better area. Okay. So if this is where we're sitting right now, where's the next level that I'm looking to touch? I'm looking for places where price has stopped often before. This one's a little unfair because we're literally kind of sitting in that wick candle. So we already know that one's been hit. But the next one I'm going to be looking for can be right in this range. I'm going to show you here in a second what that looks like after I label this properly. Area of interest. Got it. If for some reason these levels don't become clear, so first I'm going to do it this way, and then I'm going to go line chart and see where that stuff lands. Again, we've already hit these levels, so this is kind of not that great. We're really in a mess, but sometimes we come to the market and it is a mess. So we need to be able to do this no matter what. So now, again, we're moving down. The next area I'm looking for a reaction is going to be here. We've got a lot of times where prices stopped and stalled at this price point. I always want to be over the price point and never at the tips. That's how I've always done my areas of interest, because if this is where the spread opens up the most, is at the liquidity levels, the swing highs and swing lows. That's where the spread opens up, especially on the VIX the most. So I don't want to be trapped in those things. I want to be my best possible. I want to be out before then. So I'm always looking prior to. But we're moving down, so I'm marking down. Cool. My next level is going to be in here. Kind of again unfair. We've already hit these levels. It's going to be here, which is technically going to be before those wicks, but we already wicked into this zone. So it is what it is. We're working with what the market has given us. Now, I can't see another level to the downside without going for the line chart. I can tell you that this bearish candle, this first bullish move, this is going to be where I'm targeting. Right here. And then I'm going to show you what that looks like on the line chart. I typically always mark up with a vertical line so we can see from this point on is where we marked it up, right? So from the candle price going what we're on is always right here. Okay, that's here. That's where we found these levels from. Cool. On the line chart, you'll notice that this box, and or if you're using a line, is typically kind of encompassing the tip, but it's usually before the tip of any of these peaks on the line chart. Okay. And look to the left. The mid-range of this box has been hit, wicked into, tickled, touched, played with, a whole bunch all the way across. Okay. All the way across from the high of it to the low of it. It's just a significant area. And you can see that also in how the wicks have interacted. Okay. So we already know, granted, this move has already happened. But had we done this before opening bell, you would have seen this level and this level get hit. The same ways we marked that up. And I'll tell you what I do with these areas of interest here in a second. Then, of course, last but not least is here. Beyond that is our low. Okay. That's where liquidity is sitting. Now, I'm always picking 2 to 3 to the downside plus my extreme high and low, 2 to 3 to the upside plus my extreme high and low. Same thing over and over again. So now that I've marked to the downside first because we're moving down, I'm going to mark to the upside. Assuming we're on this candle and this has all happened. Again, I'm looking up to see the next areas where price has stalled and stopped. So we were moving up. We saw with these 2 candles. I'm not targeting that peak. I'm targeting prior to that peak, which is going to be in here. Okay. What that looks like on the line chart is kind of encompasses the peaks a little, doesn't it? Even though on the candle, it really doesn't. So I can see it both ways because I've done this for so long. You can choose the one that your eyes see best. But now I've got this area. Cool. I know it's significant. And if I'm not sure, look how much in the past this level has been rejected. You're looking for at least a few times where you get a pretty peaky reaction, right? You're getting some kind of a peaky reaction if you're on the line chart, and or if you like the candles better, you're getting a lot of rejection and reversals at this level. So we stall here, we broke above, we closed close to here, failed to come through that. Here we get the wick, here we get this kind of the base of this candle. I'd probably make that a little bit wider, just based off of this stuff all the way over. Give you an idea. Cool. If I'm moving up, same thing. So we've got our first level. If at opening bell we decided to push up, this is where I'm looking for my first reaction. I'm looking for price to go to here. If it breaks through and retests, I'm going to take it to the next level. If it breaks through and starts to reject back, I'm going to take it back down. I'm using these as targets for take profits. I'm using these as reaction zones because how we react in this level is going to tell me, am I going to buy it back up? Okay. And right now in the hour, not so great. Actually, I'm kind of glad we're doing this now because we can go back to the tiny time frame and see this. It's not going to be a lot of data because it's only one candle, but it is some data. Okay. So we've got one. Next one. Look at right here. We've got wick, lots of closes. We broke through. This one doesn't really wick all the way back up, coming all the way across. We've got a lot of action in this level. So same thing. I'm going to be looking to the left. Okay. What does this level look like on a line chart? Well, this one kind of misses this peak a little bit. Okay. It catches all these peaks. This is something in here. And it catches this. That's my next area of interest, right? Same thing. If this is where we're at pre-opening bell, because remember the candle we were at prior before was where this yellow line is. If we break up to this, I know what I'm looking for. It's going to be my target, right? If we break through and retest, I'm going to take it to the next level. If we get a lot of consolidation or funky price action, a lot of wicks, and I get the breakthrough and retest, I know I can take it down to the next level. Right? I can use these. It's literally Mark Douglas is trading in the zone, but I have to refresh. This is a huge void. So it looks kind of clean on this, okay? Because obviously we know that this was news driven. Here's our high. In this case, I do think the high is going to be significant. I'm going to go ahead and mark that. The vertical line, that's our high, okay? Come back to it. So that's our high. We already know that. But it's also, notice to the left, we whipped into this area. So by the time we get to this zone, we've already broken through some of these levels. This is going to be our high. This is also a zone. but I want to signify that this is not just an area of interest, that this is a high. So that's why I'm marking it like so, marking it with a line. Beyond that, as you notice, when I come up here, I don't have a line of data. I've got this area where we get wick, 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 one bearish bullish candle. I've got this whole area, but on the line chart, look how not clean that is. So that our next level isn't going to technically be until up in here, which is pretty darn far away. It's going to be right here. There's a baby one here. I mean, so we can really zoom in. We can go low, 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 and we can play. Don't get me wrong. There's another one here. We like this one. Okay. But we don't necessarily need that many. This is the most significant one to the upside. I think this is going to get barreled through if we are moving up. But we'll see. I'll mark it up just so you guys can see it. That's prior to this peak. So it's kind of mid-range in between these peaks. Let's move that. But this is only one touch, so it's not that important, right? It's not like super significant. So I don't love that one. This one has many touches, more significant, right? It's just an area of congestion. Whatever helps you see this best. When you look at this, if you can't see it on the candles, it's too messy. That's okay. A few key points, and then we're going to go bounce around and I'm going to show you some more, is you get a big bearish run. You're looking when you first start to see those bullish candles, AKA, which again, I didn't even know this at the time, those are order block areas, right? So it's very comparable. If you get this nice bullish run and you get a lot of wicks and rejection, you get that 3 candle formation, you're looking at these levels. But each one of these zones should have quite a few bits of congestion, wicks, or interactions. The purpose of these zones is to give you the price points where there's congestion, wicks, interactions, reversals, stopping points, stalling points, okay? That's how we're using these. That's what we're using them for, okay? What else? Remember, you're going to treat them as a zone, never an exact line. You want to see how price reacts inside of them, especially on the daily time frame. This is a pretty big zone. You get lots of decisions to make. They're really, really awesome. I can use this with the golden strategy. I can use this with Ichimoku or a breakout strategy. I can use this with pretty much anything, right? To tell you the truth, like we have an endless amount of options of how to use these. But remember, these are reaction areas of interest. You'll also notice if you go to put on any of the fair value gaps or ICT concepts, not all of them, some of these are the imbalances. Oftentimes they line up with imbalances. Oftentimes they line up with fair value gaps, key zones, supply, demand, support, resistance. I just feel like this is a duplicatable way for you to train your eyes to see significant areas on the chart. Because we can teach you fair value gap or whatever, whomever, famous person's concept is amazing. And they may be great and they may not be great. I'm not here to say that. But I am here to say the takeaway is your job is to get good at seeing the levels yourself. And that's what you're doing here, is learning to see the levels yourself. So here's an idea. If for some reason, I'm just trying to cover everything, okay? If for some reason you can't see anything to the left, you then go to the next higher time frame. So by then you'll be able to see, wait, this is truly a significant area, okay? We like that one a lot, right? Has a lot of play. So we wick into this. This is the other previous high. Like this is an important area. This was the previous all-time high before we came up there. This right here, look how much rejection we have. Remember, we didn't even see this when we marked this up, okay? We could not have seen this. But we broke through, retested, kind of close to retested, broke through, stayed within, retested, stayed within. This is literally the stopping point at the hour mark of that candle, 4-hour mark more accurately, but pretty significant, right? So we've proven that these areas are pretty on point. And if you're not sure, you can clean them up. So we like this one a lot. I like this one as well, okay? So a lot of play. Sometimes you're going to have a lot more price action to work with. Sometimes you're going to have less. And that's when going up or down a time frame is going to be significant and necessary. Otherwise, you don't really need to. You also might want to find, hey, wait, this is important because, but also notice this level we saw with our own 2 eyes also happens to be the all-time high from over here, right? Because they matter. They matter backwards, and you're going to find that they matter forward. So what else? Back to the 1 hour. Once you have these, the idea is you can use them as alerts. You can use them to take profits, trade to, through, and from over and over again. Great way to be. Let's see. You can use trend lines into this, any strategies. It's not just the strategy, but this is the information. Like, for example, if you have the Swiss Army knife and ability to see your levels in any bit of an entry strategy and proper management, you're fine. You'll be able to do 1,000 billion things. And now we wait. So to go back down, now let's go to the 5-minute time frame, back to candles. This was the candle prior to long rounds. This is the 9 a.m. candle. This was our high that we had formed. This is 9:30. So we popped up. This wasn't formed yet, but this is at 9:30. So we would have known about this zone before 9:30. So this wasn't formed yet, right? I did anticipate making a high, but cool, we made the high. We came into this. If we're selling, where are we targeting? Cool. We've got our next target. You'll notice how well that plays out on the baby time frames too. And we can make more. We can go to smaller time frames to mark these up. We can do larger time frames. I just like this personally. Cool. So we broke through. We retested into this zone. We've got the interaction we want. We broke through. We wicked into it. We came back down to literally our next target. How did we know this was going to be a significant area? We didn't know, right? We came back up to kind of retest it and really come that close to the zone. And we pushed all the way down to the next zone. Okay. Then we got the candle actions of rejection. a nice bullish candle, cool. And now we're pushing back up. We knew this was pushing back up. You can even do this on the 1 minute just to see it a little bit more clearly. This is 9:30. We pushed to break the current high because at the time at 9:30, this would have been the current high. We pushed and made the spring, came down to our first zone, retested, and just it's beautiful. It really is beautiful over and over again. And now this is where we're sitting. So definitely not a bad way to be. That is the major way I have been doing this for many years. So the last thing I'll add, if you're struggling to find your highs and lows, you've got candles, good one, sure, but like them both. Another concept is if I normalize my view on whatever time frame I'm deciding is mine, I'm gonna normalize it, number one. Number two, I'm looking for the most recent engulfing candle, the most recent big A candle, right? So the most recent bearish one and the most recent bullish one that's closest to the bottom. So this point right here, this most recent big engulfing bearish candle is my areas of significance, right? This is where I'm going to be marking it up as my extreme low. And then the same thing to the upside. So I like this one, but we formed a higher high since then. So I'd have to be using any of these. None of those are crystal clear. So I'd have to keep going. None of those are crystal clear. Don't love any. So this area would be the one I'm kind of looking to target, is looking for the most recent engulfing candle near the high and near the low. And in this case, this big bearish engulfing big A candle, I'm thinking inside of this candle range is going to be a magnet. And I use that when I'm targeting. So I would have known that prior to what painted this morning. So what painted this morning, our most recent bearish huge candle is right here. Cool. Our huge engulfing bearish candle. Our most recent bullish engulfing candle is here, and we kind of already get the highs. So not as magnetic today, but those are the other consideration factors I would be having. And really that's it. I take this data a couple times a week, usually once a week, depending on the zones of the flatness, the consolidation of the market. I can do it once a week, twice a week, or once every other week. And you'll be surprised to find out if we are buying, if we're breaking above, these zones get hit very regularly, probably 80, 90% of the time. So you can trust that. And the reason I like this more so than, let's say, Fibonacci is very subjective and is constantly in motion. So there's that. Quarter points are very magnetic, but there's hesitation in half points. So something to think about. I don't think those are bad. Pivot points repaint, but have a very high value, right? And all of that stuff is, again, a little bit more subjective. This is something that you can see naked, no indicators, and you can teach yourself, which I think is freaking awesome, right? You can perfect yourself, which I just think is second to none. So I think literally that covers every single thing in terms of how I've been consistently marking up my charts for the past many years and what I've been doing in order to do it. So I see my go-to question, questions and only questions.
Well, first of all, I thought you were doing this every day, but you're doing it once a week. That's different. My question is, I would assume after you do this, you move down to 2 minute or whatever you're actually trading at. My question is, at what point in those zones do you determine when you have a good idea of which direction you think is going to go? Do you wait for it to clear either above or below one of those zones and then put a trade in? Or
Okay.
I hope that question makes sense.
And good question. See, I'm marking this up a few times a week. Like, so if we end up way far away from where I marked up, so like, and sometimes if I had marked this up, by the time I get to this day, all of that's gone. It's no longer
The
relevant.
price moves enough, you have to redo it. Okay.
But sometimes you're going to find, wait a minute, I'm still within all of these zones I marked up from Sunday. So that's the first part. The second part of your question is, again, we did a little bit of price action from the time in which we were marking this up, assuming this was it. If I go down to the 2 minute, okay, remember I'm waiting for a blue bill in this case. I know technically I'm buying, I'm bullish, I'm above on the golden strategy. Everything is telling me to buy. I definitely anticipate making a spring. Cool. That's where we're at. How I'm going to
Oh,
decide.
I see. You're at the top of that zone and it crosses below the 50 and the 3 and 8, I guess 3 and 9, whatever that is.
Yeah. So here's the thing, ready? These are never going to be exact. This isn't like a quarter point, which is exactly 20,000, right? Exactly 20,250. This is an area. So I'm going to use another box just to show you.
That's an area where you just expect price to do something.
So I'm going to put it as a different color. I'm going to do, there we go.
It's based off of previous data as well. You expect it to be somewhere in that level, you expect price to move one way or the other.
So we might have it painted like so, really small, but this might be the whole range of that, support. And I just really should have deleted the part that says support and resistance, but it's an area. So we're not going to treat it like a dead price that is exact at the quarter point. We're going to say, hey, look, we're moving very fast to this. We've got a full body candle. We're moving below it. I'm definitely targeting the next one. Hey, we've got a full body candle. And let's go to the 1 minute. It's going to get more choppy. The smaller you go, the more chop you're going to get. No matter which strategy you're using, it's always going to be the case. Okay. But cool, we're moving. Oh, we're getting some wicks. We're failing to get to our next level and we form a bullish candle, right? So now I know whether I'm not saying you should take it as a reversal trade to retest the 50 or into the next zone. I'm saying price tells a story. Okay. So now I know if I am to retest and look for another sell, or if you're looking for the reversal trade.
Because you're under the 50. Yeah.
You can say, look, I'm closing out of that position. I'm closing out of most. I'm locking it. Got a bullish candle. Okay, we come back down. I'm still failing to make a low. Cool. I know I'm going to retest. We come up here. We don't really get any bodies and continuations. We really want the bodies and continuations. So then what we get our body. We wick back in and we close again below. So that's telling us a story. Not to mention that we retested the 50 and we have a 3 and 9 cross. Cool. So
Right.
now if I'm right here,
Most tried to bomb into that zone or that area as well.
if I pretend I can't see what happens next, we know this was a feisty move. We just broke lows. We know we have to retest. Okay. Can you scalp into that buy? Yes. Again, like we just talked about earlier, this little bit is worth a lot of money, but you got to be disciplined in your mentality and your strategy. So pick and choose your battles. By the time you get to here, that you get a bearish close below, remember, not exact. This isn't like opening range, which is an exact price point. This is an area. So figure it's a fluid area. Okay. But you close below, your next candle wicks back into 50% of that zone. And then there you go. By that point, you can know you can short. And if I'm shorting here, I know my next target's going to be here. Cool. What do we get? Get it here. Wait, we've got a nice engulfing bullish candle. So again, should I necessarily be buying? No, but we made a pretty feisty move. If I wanted to try to buy up, or at least even 50% of this move, right? Cool. I've got my bearish close, my bullish close above it. Next
And just
candle.
like you drew it up, it seems like price is reacting when it reaches those areas.
In this case, we react to the 50, not necessarily to here, but again, it's a zone.
Yeah.
There you go. We get confirmation. We're below this zone. We know we've still got downward pressure. We've whipped on the 50. We've got a nice doji on the 50. By the time we break this previous candle low, we know where we're targeting. Oh, wait, we still have all bearish candles. They're feisty candles. We're here. We know we're going to the next zone. Cool. In the next zone, we get our next bullish candle. Okay. Now I know this might be turnaround time. That's umpteen trades. And if you're smart, you're done. You took 1, 2 of those, you're done. Yeah. Because everyone's so easy and quick to argue, well, what about this, and this? You should have been done at some point, yo. Like, you shouldn't be on trade 87, okay? You shouldn't be on trade 87 for the day. And I don't mean how, like, Top Step and Apex counts, like, 58 trades for scale out and stuff. I mean, like, it had 3 trades, you know? Three in total, and I'm done. So as you come back over to here, same thing. If and when you choose, you've got the reaction. Cool, you wick above, nothing there. Full body, aggressive move to the top side. Now, we know this candle has some oomph, okay? We retest 50% of that candle in that next bearish candle. Cool. We can't take this buy because we're trading into a zone. That's what I mean by trading into a wall. We're not trading into a wall.
Right.
This is close. But then we retest again and we failed to make a lower low. Multiple wicks. We're staying above 50% of that zone and to get a 3 and 9 cross. Fine. Maybe I'm greedy. Maybe I want to trade umpteen. So I'm going to scalp it up to the 50. I know I can do that. Not here because we're trading into a zone. Okay. By the time I get into here, we retest. Now we've got 4 candles, wick to the upside, and this bullish close right here, this smaller one, not the big one, that's also a 3 and 9 cross. We've respected the zone and 50% of the zone. Now I'm taking it up to here. Well, I'm targeting this zone though. I know I'm going to get a reaction. I just need to know in this case, and I'll show you what that looks like. This is a baby move. I get it. We said this candle. Okay, so by the time this happens, you've got all those wicks. We're staying above the 50. This is going to be ugly, but let's make
And
it.
currently, it looks like you may a possible reversal back down to that other area.
Oh, wait.
That's what it looks like.
Assuming we can't see what comes next, because we're going to be wrong sometimes. Okay.
No, I mean, I was looking at the current one, the very, like right now, it looks like it may reverse back down to that other zone.
Gotcha. Well, I'm not talking about that yet. I'm not there yet.
Okay.
So here's where we're at. I need to clean that up because that's not accurate. By the time you get to here, this candle closes above the previous close. Okay. This is not anything to write home about. It's only a 1-to-1, but that 1-to-1 is only into 50% of that next range. I'm trying here with all the writing. That's 1.6 to 1. And if I'm trying to retest a 50, that's your 2 to 1. So
Yep.
even get it. And then what do we get? I'm going to delete that. And just to show you on this not so perfect move, how to use these zones. Now, cool. Assuming, I kind of wish we could remove drawings or the indicators or both, but I'm not going to keep this simple. Assuming this is where you come to the charts and you have your levels marked up. Well, this is where you're sitting. You get this bullish close. You have the 3 is above the 50, but a nice doji, and you retest, right? So now I know, assuming we don't know what happens. If I wanted to buy here, I need to know my stop can be here or maybe a bit below this area of interest. This is where I'm looking for that next major reaction. But remember, now we have new data. So I also know that before this peak, we're going to get a reaction. It's going to be right in here at that 2069 level. So 2069, okay? So I know that. Now watch, as we come over here, cool. So I know I can buy it. Gold strategy said I could. I know my next zone's not though here. I know I'm going to get some reaction here. But I'm pretty sure I can get to my next zone. And what do we get? Anywhere in here, you got the break, the retest, and the confirmation. You bought this. That again, you're taking it to the next zone. And you got that. Cool. And again, there's so many trades here. And not every day is going to be perfect, but knowing these levels helps you. It helps you trade differently. Because remember, this level we wouldn't be able to see at opening
Yeah.
flow. Wasn't existing yet.
Without those areas of interest, I mean, that's what I was trying to do. You're just basically trading off of the crossovers and things like that, where the areas of interest will give you a better idea of what, how can I say, a good possibility of what's coming.
There you go. But
just I call it flying blind.
okay, so let's go to gold. Okay, so I'm on gold. I'm going to refresh the chart and go to 1 hour and just do this very quickly. So same concept. I'm going to mark up just to show you one more time. The candle prior to the one that I'm on. Because I need to know when I found those boxes to validate if those boxes turn out to be accurate. And this is something I picked up years later than I probably should have, because I was like, wait a minute, when did I make those boxes, right? Because it's really exciting to see them get hit, but if you can't trust when you made them, they're not that valuable to you yet. When you start to be able to trust, wait, I made those boxes on this day, okay, at this time, I knew. It helps you trade differently. So
Just look at that. I can spot 4 areas just by looking at it.
anyway, this is not something you overthink. The biggest deficit is that where like having a defined thing like order blocks or imbalances or gaps or other forms would be better is for somebody who overdoes it. Because if you can't control yourself, you cannot do it this way. But we're moving up right now. So unfortunately, we're at all-time highs. Actually, let's start with that. Our high is here. Our low, remember, we've already refreshed the chart, but our low on screen is all the way down here. Okay, and just to confirm that that's right. Oh, that is wrong, but you guys get the idea. So refresh the chart so it's consistent. Let's take that off. We want to be consistent. Consistency is what makes us valuable. If you're not consistent, you won't know the difference in, well, this time I did it this way and this time then it has no value. It's not duplicatable. Nothing. If it's not duplicatable, it's not profitable. So we're not doing that. Anyway, so here's where we're at. In this case, you're at all-time highs. So in this case, since we are moving up, okay, a little to the side, but up nonetheless, I want to see any price action I can possibly find in here. So I'm going to go down to the 15-minute. They're still really squat. Let's be honest, but we're going to do it anyways. So, get my box. Bye, Scott. Thank you so much. Here's
When you're at an all-time high, aren't you kind of limited to where? I mean, most of your areas of interest have to be below that because you have nothing to reference going up.
no, not yes and no. So here we go. Bears, our most recent bullish low, this first bearish candle, that's technically an order block. This wick right into it. I like this area. So if I'm targeting something, I'm looking for any areas of interest I can possibly find. Okay. That's my area of interest. Blue. Got it. Cool. So if opening bell comes and I'm moving up, I'm going to be targeting here. Now, all these wicks are making it real hard to see, but if I use my crosshairs, I can see price stopped here, stalled here, here, wicked here, stopped here, closed, open, but wicked, and we ended up maintaining that wick, okay, all the way across. So this is a pretty significant area, but it's ugly and it's hard to see. So again, actually, I'm going to use bar replay to here. There we go. Cool. So assuming like we couldn't see that stuff, we need the data. We need to be able to see. We need something a little bit more accurate. This is hard to see. We don't know yet. Then we'll go line chart. Here we go. We've got this nice little peak area. Okay. This is a significant area. Look, 1, 2, 3. We've got 3 pieces of proof that says money goes here. Okay. If there's orders here, and if there's congestion here, we like this area. And we're going to
That's why I said I think line charts in this case, something like this, are easier to see for me than candles all the time.
well, whatever works for you. So here's where we're at. At this time, we're technically moving down in all fairness. So we've got this area, which is prior to this peak. And if you like line charts, I'm going to mark this one up using mostly line charts. There we go. Peak, peak, peak. We got lots of play in here. So this is going to be our next target. Pretty sure we did that this morning. But cool. Where at next? I also don't want 500 levels. Okay. In this case, it's a pretty feisty move. We've got a war looming, but technically can I use this? Yes. But I'm going to go all the way down to here. So we've got a lot of play here. 1, 2, 3, 4, 5, 6. And I think this wicks into there. We can find out. Nope, it doesn't. So just using the line chart. Cool. Our next big area of play, there are more, just so you know, there are more levels. Here's a baby one. It's probably not that big of a baby one, but we're probably going to get some price action. If and when price comes down to here, we're going to get some play at this level. And you might not see it on the 1 hour, but you will see it on the 1 and 2 and 3 and 4 and 5 minutes. You'll see price action in this area. You'll see a reaction. Okay, back for line charts. My next major area is going to be here.
That's not showing 15. Is that where you're meant to be?
I had to because of...
Because you're at the all-time high. Okay.
Yeah. So I went to the smaller time frame because I needed those other levels. And just again, to clarify, this level would still have been this peak. This level would still have been these plays. This level would still be this high and this low. This level would still be these lows. See? It's still the same. But I needed the clarity because we're all-time highs. We've got a lot of stuff going on up here.
Right.
So if we're at extreme levels, I have to choose a different time frame. But here we go. And then I'll put the replay back on. I'm pretty sure we whipped into that first one.
And I didn't think about this. In my off time, I could actually do bar replay and practice this with previous dates.
I think this action is much better than all the strategies you test. And because that stuff you get lost in the sauce. This does not. Okay. So my last one is probably going to be right in this range. This is going to be the big one. So if and when we do break down, this is going to be my big target. This is where I put my question mark. Like here and here. These are my big ones. So back to the candles, just to see what those look like. That's where we're sitting. Lots of play. This one, look all the way across. Lots of play. Look at this one all the way across. We broke above it and wicked back down to it. Lots of play. Play, play, play. We got lots of zones because there's a lot going on this instrument. But now we've got it, so I'm going to go ahead and press play. I'm actually going to go down to the 1 minute. Okay, so this is where we're at. This is what we know so far. So I'm going to press play. Speed that up. Okay, so we failed to kind of come into that. Oh, we're trying. Well, there you go. We wicked into it. Okay, cool. If I'm not mistaken, we're still staying above this level. Okay, still staying above it. Time check. 11:18. Still staying above it. And that's where we're sitting right now. And we're trying to come down to it. So just so you can see, I still believe you need other confluence, okay? I still think you need to pay attention. And this makes you learn candles and price movement a little bit different. But if you know you're looking for a buy at opening bell, this is a bit of an expensive stop loss. You can use this as your stop loss targeting the next zone. If you come in here, you get to break this bullish candle is misleading, but the next candle does not give you the continuation. You sell down, you know you're targeting the 50. You're targeting the next low. Okay, cool. You know that. If you're using golden strategy and you're here, you can say, wait, I know I've got my goal thing. We've retested. I've got this. Cool. I'm going to buy it up. And then you got a really tight stop loss. You got a great system going on. But that's how I have been doing chart markups and what I call areas of interest. Again, I think these are more valuable than what other people create because they're self-created. Okay, number one, they're duplicatable. I think that they're very much so worth your time. A lot of people are spending so much time testing tools and strategies and approaches. This knowledge would make almost any one of their strategies better. Any one of them. And it's not overly complex like, and I don't want to talk a bunch of mess, but it's not overly like 20 years worth of stuff to go through, SMC concepts and ICT, it's not that. You can practice this, learn this, and get pretty good within a month or two. Like very, very valuable. So it's duplicatable is what makes it valuable. So that's one. And then I've got something else actually, which I suppose I can save till when I release the indicator, which is a separate thing I've been doing, particularly for futures, using the multiple sessions and stuff too. But questions particularly on this.
The video I saw, I think you did last November. This is a lot more in depth and detail than that video was as well.
Well, thank God I'm improving. Thank God there's that.
Oh,
Hey.
I was going to say, would you do a 1.5 to 1, or do you base yours off of when you do an exit, do you base it off of 3 and 9, or do you base it off of the zone where you do exits?
I'm using these as areas of interest. So I'm looking at how price reacts in these levels. I'm using them as targets and reaction areas. So this isn't deciding. Like I would even use it as a stop loss or a take profit in conjunction with whatever I'm doing.
Oh, okay.
That's
So this be used in addition to whatever we're doing.
you can use it standalone. Like I still think there's a value in something else. I mean, I don't care which else, but there's a value in something else to add to it. But yeah, you can technically use it all by itself. All by itself. I, again, think there's a value in having like the 50 on there, or the VWAP, or some level of clarity for direction, volume, if that's your jam. I still think there's a value in using something in relation to it, but these zones will help you trade. So if you're taking opening bell, they swept liquidity, they made a high, and they dropped all the way down to 4 levels of these areas. 4. I mean, the risk to reward on that is, I don't even know, stupid high. I mean, you get this.
Especially that first one. Yeah. Well, I mean, that's the one that I got that big chunk out of this morning. So I know it's pretty high.